Hello and welcome to Fintech Fridays, where we talk about the top 3 fintech headlines in 30 seconds, followed by deep dive into them for about the next 4 minutes. And our first headline for this week is about Slice, a fintech company founded in 2016, which has recently raised 20 million from existing investors. They had previously in November 2020 raised a debt funding of about 39 crore rupees, which was used to grow their books and widen the reach of their credit solutions, especially targeted towards the young population. But hold on, what is Slice, you say? Slice is a payments and credit startup for the young Indian. It aims to be an alternative for the digitally savvy youth of the country and has processed over 1,100 crore rupees value of transactions since its inception. They aim towards the youth of the nation who value convenience and are reward hungry, but typically the thin book type of customers. Because at Slice, you don't need a credit score to apply. And for every online transaction of yours, you will get a flat 2% cashback. Sounds fun, right? So do 3 million others of subscribers of their feel as well. Their founder believes traditional credit card companies have it all wrong. In his opinion, they view credit card as a credit instrument. But really, it's a high-frequency payment instrument. And to that end, they've done away with a lot of these fees and interests and all of those complicated portions on their card. In fact, you can convert any of your spends into an interest-free 3-month installment. And the most alluring part, they claim that they are accepted by over 99.95% of the merchants. Let me know if you'd like a deep dive into their business model. Happy to share another video on that. Slice is powered by Visa, and since we're talking about Visa, I thought I'll slide in a bonus news as well, which is that Visa has acquired the Stockholm-based open banking startup Tink for a $2.15 billion deal. And this was right after Visa's plans to acquire Plaid, a fintech firm that develops softwares that allows customers to link their banking infrastructure and make seamless payments on third-party apps, was halted due to an antitrust verdict going against them. Alright, time for our next news item, which is about CashFree and their payout product, which has become a market leader by processing 50% of payouts. Now, the digital payment space in India tends to be classified largely as peer-to-peer, peer-to-merchants. And these are broadly the two types of transactions that you have. However, of late, another category of payments has now been coming under the radar of fintech firms, which is merchant-to-peer transactions. This is where the payout model sits. Payouts allows a seamless way for merchants to disburse refunds or cashbacks to their customers or make monthly payments to their vendors. All you have to do is send a link via an SMS and the customer themselves will render their details, choose their medium of payment, and voila, collect the money. CashFree currently facilitates payouts for e-commerce, apparel, home furnishing, electronic retail, and a few other portals as well. And they have plans of onboarding 5 lakh merchants in a span of 1.5 years and also onboard certain brick and mortar stores as well, which give payout links for refunds and products brought on their stores instead of cash. In fact, when asked, Akash Sinha, CashFree's CEO, said that they aim to grow at over 200% in the coming years, which may not be that hard considering in 2020 they grew by 183%. Phew! Finally, coming to PolicyBazar, the aggregator of insurance schemes in India, which has recently announced that they will be giving up their aggregator platform license. Now, PolicyBazar is a digital platform where users can compare various financial services offered by various competing entities and choose the one that perfectly fits their needs. And for facilitating this lead, PolicyBazar then charges the financial institutions a fee for it. Another revenue source for them was the advertisements on their platforms. Their revenue of the consolidated entity, which is PolicyBazar, PaisaBazaar and all of them together, grew at a phenomenal 147% from rupees 346 crores in the financial year 2019 to about rupees 855 crores in FY20. But their net expenses for the year stood at over rupees 1,150 crores. Their InsurTech platform alone reported a healthy 66% increase in revenue from rupees 310 crore in FY 2019 to rupees 515 crore in FY 2020. The company's expenses also increased by 40% to rupees 737 crore, leading to another loss-making year for the entity. So, is the loss of 305 the reason for them to be giving up their aggregator platform license? Not really, because they're quite flush with cash. Just last year, they raised about $627 million from investors like SoftBank, Inventus Capital, Tiger Global, Premji Invest, and a lot of others. SoftBank alone had pumped in about 130 million into the company. And this was way back in July 2020, which brought the valuation of the company at 1.5 billion. So, what is making them change their tactics? And this is where the power of data comes into play. Because for any platform business, data is like the air that they breathe. So 15 months after COVID-19 pandemic hit us, the data from the consumers on the platform as well as their own internal user research suggests that 90% of Indians believe that health and term insurances are crucial not only for financial safety but mental well-being too. To arrive at this conclusion, PolicyBazar had surveyed over 6,000 of their consumers as well as passively observed some of the behaviors of the users on their platform. And in my opinion, that is what has led them to embark on this journey into insurance broking now. In fact, they've already set up 15 outlets and aims to expand to about hundreds of other locations. They've even received IRDAI's license for setting up an insurance broking business, for which they had to give up their aggregator license. They will now be setting up brick and mortar stores to entice customers to buy their insurance products. Through these stores, customers will have direct access to PolicyBazar's proprietary comparison engine that will help them choose the right insurance product. Does that mean the parent company will now get into credit disbursals too? Let's wait and watch for that. Meanwhile, if you would like me to dive into the business models of either Slice, CashFree, or even delve into how PolicyBazar will differentiate in the crowded space that they are entering into, let me know. More than happy to do that. Before I leave, another bonus news. Paytm just delayed the filing of their IPO. So we will need to wait a little longer to get our hands on the final prospectus of the Fintech juggernaut. And if you like this, please do support by sharing it with your friends, liking it and subscribing to my channel. You know, for the algorithm. Until next week, see you later.